Today's day number 5151 of the $1,000 account challenge, and we are break even. Slightly red. $16 loss on the day, 0.25% loss of the total portfolio balance. I took 3 trades, 1 that didn't work and 2 that did. Unfortunately, on the trade that did not work, I took a larger percentage loss than the 2 trades that did work, so I was not able to recoup the loss. For 1, I'm still red on the day. And 2, I was not able to turn it into a green day, right, to profit. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. We are now on day 51. Straight off the day trade watch list, we had Tesla as a long idea above 177. Now, today, in the overall market, it was a gap up day. Normally, I do not like trading gap up days because it feels extended. I mean, if I just look at SPY on the 5-minute time frame, look at the gap up that we had this morning and then the continuation move up, right? So it's like extension in the pre-market and then extension shortly after the open. But what I noticed on Tesla today was that it actually wasn't a gap up with the overall market. It was something that was a gap down, in fact. So the moment that this broke the previous day's closing price and $177, the stock goes from red to green, and I thought it might be something that continues up given that we do have bullish sentiment in the overall market. So this is where I decided to place my trades today. However, knowing that it was a gap up day, I wanted to mitigate my risk by sizing down rather than sizing up. So we get the break of $177 right here, and I hesitated. We had 2 candles that pulled back to test 177 as a point of support. This one here and this one here before you get the move up into the high of day. Now, I did not take this entry. I thought about it. I did not take this entry though because I was like, you know what? We're within the first 5 minutes. Maybe I should stay patient, see what this is going to do, and then try to enter on a dip. So that was the decision that I made in real time at that time. Had I taken that entry, we did get the high of day move, and I would have profited over 20% on this position. Now, that being said, I followed my plan. We get the pullback. I take the entry long here initially, then I add to the position long here. Maybe what I should have done was cut the position the moment that this broke below 177, but I was trying to give it room to work. So when it did pull back to the previous day's closing price and started to bounce, I was like, okay, this is all right. We're actually back to break even or slightly green on this trade. Maybe we will get a run to and through the high of day. And we don't, right? The trade curls over, Tesla curls over. I added the position one more time off 177. And we just get the breakthrough 177. So no follow through from the initial run up, and there's just really nothing that we can do about that. This trade resulted ultimately in a 30% loss. Now, percentage-wise, that is a larger percentage loss. However, like I said, I was sized down on the trade, so I really only lost about $150 here. So not that big of a deal, but not the best way to start the day. Then we had SPY as a long idea. Let me go back to the day trade watch list. Long idea above $513. 5-minute time frame. SPY does break 513 before the market opens, so what we decided to do was move that long trigger up to 513.5. Now moving to the 1-minute time frame, that was the right decision because we do get a rally to 513.5, a rejection, another rally to 513.5, and then the break over. We'd make the decision to go long at this time on the break of 513.5 during this consolidation. We get the run up into the high of day, and I took my profits at 10%. I think maybe in real time it was the right thing to do because the stock was doing all of this consolidation prior. I just wanted to make sure that I locked in the profits that were offered. However, in hindsight, it was the wrong decision because SPY continued to push up to highs of nearly 515. This would have been a 20% plus gain and probably would have put me green on the day if I had held. But taking the profits there, it was a 10% gain, and I was all right with it because I was recouping some of those losses from the Tesla trade. Now, the third trade that I took was on AMD, straight off the day trade watch list, short idea below $210. AMD rejects the long trigger at 214, falls below 210. We don't take this initial entry short right here because it's a trigger to trigger trade. That's going to be a potential bounce spot. It does indeed bounce, but when we get the break back below 210, and not only the break back below 210, but also the break of the low of day here, the rally up retest, we go short following the rejection of 210 here for the move down. We're holding through this position, stop loss placed at the previous day's closing price, and we finally get our move into the low of day. I did take my profits at 10% into the low of day, and then I close the remainder out. So I'm scaling out of this position, close the remainder out at break even as it rallies right back up. So AMD, just another 10% gain, and that was also the right decision to make at that time because it did not fall any further. So the only thing offered here was our 10% profit margin, and we went ahead and took that. So those two winning trades, the 10% gain on AMD, the 10% gain on SPY, not quite enough to recoup the 30% loss on Tesla, but all of these positions sized down. I purchased about 4 contracts per stock that I was trading. So sizing down really helped mitigate the risk some. I wasn't super panicked during the day. The only thing that I wish that I would have done better is not hesitate on certain trades. The Tesla trade that I mentioned, the initial entry and the run into the high of day, I wish that I did not hesitate on that move. The other one that I saw in real time that I hesitated on was Meta. As this pulled back, so we get the run from 503 to 509. As this pulled back to 506, I wanted to get a dip entry at 505, and I didn't take it. Instead, it held the previous high of day as support here, and I watched this consolidate, and eventually run to the high of day. And by that time, I felt like I had missed the move, and I surely didn't because it has continued to run. But just a hesitation to not take the trade during the consolidation here also cost me, a 20% plus gain on Meta, which also could have put me green on the day. So the overall takeaway, I'm glad that I sized down on a day where I felt uncomfortable with the gap up situation. I'm glad that I took my profits on the 2 trades where I did. I'm not glad that I hesitated so much on the first Tesla entry and not so happy about missing the Meta trade. However, we're still considering this a winning day because the profits are not really taken away from us from previous days. It's basically a break-even day. So small red days are a winning day. Small green days are a winning day. Big green days are a winning day. It's those big red days that we want to stay away from. Thank you so much. That's all that I have for you for this video. I hope that it's helped you out. Press that like button for me if it has, and consider subscribing to the YouTube channel. It's just the best way to support me as a content creator, and it's free to do. Thank you so much, and I will see you next week when we continue the $1,000 account challenge. Cheers.